Hello and welcome to this YouTube channel for ACCA FR exam prep. My name is Eden. In this video, I'm going to show you how to structure your analysis for the FR exam interpretation ratio analysis. How do you structure your answer and what goes into the analysis itself. So it's a very important exam technique to have as to how to have your way around the analysis, because it is a compulsory question. So with a good exam technique, you should be able to do well. So now let's look at these few techniques I have to share with you. Now, you need to look at the structure of the analysis. Now, in terms of structure, some requirements can ask for a certain document, be it a report or a memo. Now, you will often find a report as part of the requirement. Now, if it is a report, then it means you need a report structure. So your report should have a heading. So for instance, we can have these as the report where the heading is a report. From whom? So it is from you, the accountant, to, and sometimes it can be to the directors of the entity, or maybe you are making this report to the shareholders, or in a capacity as a consultant to management. Then you can have the date and then the subject. So the subject, for instance, can be analysis of financial performance and position of XYZ group. Now, just after the subject, you need introduction. And what goes into the introduction? It is you having a brief summary of the ratios you have calculated. So you comment on the ratios. So for instance, in the period, have there been a decline in revenue, for example? If there is, then it is good to pass that comment in the introduction to say that XYZ group recorded a decline in revenue of, let's say, 20% in a year. It's very important you put that. Now, how about liquidity? How about gearing? Maybe from the question, a significant issue is with liquidity. The entity's liquidity position deteriorated in the period, or they were having liquidity challenges. That can come in your introduction as a comment. So your introduction should be more like a one sentence. So for instance, XYZ group in the period under consideration experienced a decline in revenue and a deteriorating liquidity position. Full stop. That is enough for introduction, and that would give you marks. Now, the next structure you need to have is your analysis itself. So the categories of the analysis you would have, generally we have profitability, we have liquidity, we have gearing. So you use headings. For each. So to start with, you can have one heading, call it profitability or performance. So you talk about all the profitability issues or ratios, and sometimes you can start with revenue. So you analyze revenue, you analyze gross profit margin, you analyze operating margin, you analyze net asset turnover, you analyze return on capital employed, and so on. So you analyze all of these under the profitability ratio. Then the next heading, which would be liquidity. So you go and look at the liquidity ratios that you have to analyze. So for the liquidity ratios, you can have current ratio, quick ratio, or you can look at the working capital ratios, be it receivable days, payable days, inventory turnover, or inventory days. And you can analyze this. Then you go on to look at your gearing ratios. So your gearing ratio, depending on the formula you are using, can be debt over equity, or debt over debt plus equity, or you can look at interest cover as an example of gearing. So you need to have these categories, and for each of these categories, you type into how you evaluate them. Then your last part of the analysis should always come with conclusion. So in your conclusion, you can use your conclusion to address some concerns Maybe some of the directors were concerned with declining profitability or margins. How do you address that? Is it that it's a one-off, or the entity had experienced a general demand in their products or services, and this is not going to happen going forward? So you can use your conclusion to address some of these concerns. Or some of the shareholders are worried about the entity's lack of investment in assets. Now, is this concern legitimate? You can address that in your conclusion. Or you can use your conclusion to indicate what the future outlook for the entity is like. So maybe they have made significant investment in assets, and these assets are yet to generate revenues or enough revenues. But you have to make the point that going forward in the future, these assets will be able to make what or generate revenue. And sometimes maybe the timing of the acquisition of these assets, maybe they were made close to the year end and they were not able to generate enough revenue. You can look at that. Or you can use the conclusion to address some limitations. Maybe because the entity is a group and in a period they made a disposal of a subsidiary, and you are comparing prior year result to current year result. You have to single out the fact that this comparison is not actually possible because of the disposal. So there is a limitation, there is a weakness in this comparison. Or you are looking at the entity's figures against sector averages. You should be able to point out some of the challenges or weaknesses. Then you can make recommendations, or sometimes you will be asked for advice to be given to the entity's directors. So conclusion very important, and do not overemphasize that. You have to address the particular issues in the question. Great. So the next exam technique I want to show you, I call it the analysis itself. So what I have shown you first is the structure, to have a good structure. And please remember that it is not always the case that you have a report. Your analysis can be without a report. And if that is the case, always it is a good thing to start with an introduction. So you type in the introduction, and then you pass a brief comment on your figures you have calculated. Very important. The examiners like it when you begin with an introduction, where you highlight what you have done in terms of the calculations. One from maybe profitability, one from liquidity. So I've been able to show you the structure. Now, what goes into the analysis itself? So we have the categories of the ratios, but what goes into this analysis? Now, for the analysis, please note, you start with, so if you are analyzing profit, let's say operating profit, you start with the first level. The first level is to look at a calculation and comment. And often this calculation you have already done in your ratios. So in terms of trend, for instance, I can say that the profit increased by 20% over the period, and that is a trend. Or I can actually look at the operating profit. Maybe prior year operating profit was 10%, and in the current year the operating profit is 20%. All I'll say in terms of the calculation is to say that the operating profit increased from 10% to 20%. That is enough. Now, what does it indicate in terms of comment? Then you say that this suggests a return on capital in the year, or it suggests an increase in return. That is enough. Now, the greater part of the analysis is what we call evaluation, and where students often struggle to do. They struggle to do the evaluation. And I'm going to share with you a few techniques as to how to comfortably do this evaluation. Now, to begin the evaluation, you can pick out obvious reasons for the ratio movement. So if in the profit, which is the operating profit, maybe you have been able to pick out that there has been a decrease. There have been a decrease in admin expenses. That can be one of the reasons. So what have caused the decrease in admin? Is it that they introduce a new operational process and that has led to efficiency? That should come in your analysis. Or it is a group where they have disposed of a subsidiary during the year. And because they have disposed of the subsidiary during the year, it has led to a significant reduction in admin expenses. So you are picking out reasons why the ratios have changed in a certain direction. So I have here, look at reasons or causes of ratio movement. For example, movement in position or performance that do not match. So for example, there have been an acquisition of assets in the current year. So if there have been an acquisition of assets in the current year, the depreciation, for instance, on these assets will go up. And this depreciation would increase operating expenses. And that could be the reason why the operating margin has declined. So you should be able to explain. So what are the facts? So you are not going to speculate. You are using the scenario to do the evaluation. So you are not speculating. Or they have been a loan in a year. So maybe they have taken a loan in a year and that has led to maybe an increase in debt. So gearing will increase. Or there has been a significant increase in operating expenses because they have made an advertisement in a year, which increased cost. So there will be a series of information that will be given in the scenario. It is up to you to use this information to do the evaluation. In terms of the particular ratio you are evaluating. Or you look at the linkages. What is the link between operating margin and operating and gross profit margin? Or what is the link between the return on capital employed, which is the ratio we are looking at, and the total asset? Maybe there has been an increase in total asset in the period, and that would push down the operating margin. So increase in total asset, decrease in what? Return on capital employed. You should be able to explain that the return on capital employed has decreased because there has been an increase in total asset, and from the profit level or the profit figure, there has not been a corresponding increase or relative increase in profit to offset the total increase in total asset. So it's important you know where the movements are coming from, or you are looking at some key drivers of performance. Maybe in the period they have introduced certain strategies to boost revenue. They have increased the number of days they give a credit to their customers. That is to boost revenue. Or they have introduced discounts, trade discounts, or early settlement discounts, which are cash discounts, to boost revenue. You should be able to bring out some of these reasons. And then also you assess the impact of strategic decisions. And then also I've explained the effect of aging assets, revaluation stop losses. For instance, maybe the gearing ratio it has decreased in a period because they have made significant revaluation, or they have recorded significant revaluation surplus. Without the revaluation surplus, what would have been the actual gearing? So you would have to exclude the impact of the revaluation. So it means that within the same evaluation, you are calculating another ratio, excluding the revaluation surplus. And that is a revaluation. So you are doing an analysis, you are doing an evaluation. Or you are looking at aging assets. Maybe the assets are in their latter years of useful life. And because of that, their carrying amounts are much lower compared to prior years. And you are analyzing the return on capital employed. So the return on capital employed for the current year will look good or will be higher than prior year because the denominator you are using to divide the operating profit is low compared to prior year. So it is because the assets are aging. So it is not automatically a good thing to have an increase in the return on capital employed. You have to look at the variables, what goes into it. Then let's look at other reasons, or we have changes in debt position, or the impact of subsidiary acquisitions or disposal. And please remember, in doing all of these analysis, note these important issues. What is the entity? What is the nature of the entity? Is it a manufacturing company? Is it a service company? Is it a listed company? What is the entity? What is the nature of the entity? What are they into? What are their product and service information? What is happening in the industry? Maybe you'll be giving some hint on industry development, or the entity itself had undertaken some key developments in the year. You have to look at that. Or you're looking at market information. Maybe the entity is a market leader, or you are giving information on the financing, so debt to equity. What is the current position? What is the amount of interest? Is there a need for borrowing, and so on? And then generally, what are some of the economic factors? In the general economy, are we having income levels going up, or we are having demand falling, or interest rate increasing, which will result in a higher cost of borrowing? What is the general inflation rate like? What is the exchange rate? So it's important that, and most often this information will be in the background, in the introduction to the question. So you'll be able to pick out some of these industry information, entity information, or economic variables from the introduction. And some other very important information to do the analysis would be in the notes to the question. So I hope this guide would help you to sort of do a better analysis and improve on your scoring in the exam, looking at the financial analysis or ratio analysis or the interpretation question in the constructed response section of the FR exam. Please subscribe to this channel to receive updates on new videos.